Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets closely associated that move the precious metals prices. And without further ado, we will get into the weekly charts as always. To start here, we'll do a little bit of a deeper dive into the charts, and then we'll also get into some of the domestic and international news that's impacting us, as well as a brief conversation on the U.S. dollar towards the end. So thanks for hanging in there with us. Without further ado, Miles, how's the week shaping up?
Hey, I appreciate it, Tori. Yeah, let's take a quick snapshot here at the metals markets and a couple others. Starting off with gold. Gold's up about 4% from last Thursday, and we did push back above 3,300. Currently, at time of recording, we're at $3,318 on the gold price. So seeing a little bit of a rebound, and we'll dig deeper into that here in a moment. Silver, not to be outdone, also up about 4% at $33.56 an ounce. Moving over to the other white metals, platinum, hold on, boys, up 10.5% over the last week.
Yay, platinum.
Go platinum, 10.5%. It's back up over 1,000, pretty strong at 1,072. And this is the highest price on platinum in about a year. It was last May that we were up at these pricing.
I had to blink 3 times when I first saw the spike. I'm like, oh, there's a typo. But Palladium was supporting it, so I thought, well, there's something to it.
Yeah, and it all happened yesterday and today. So this isn't a week-long thing. This is a 2-day thing here, and may have something to do with some of the international trade negotiations going on right now. Palladium is supporting it, not quite as strong, but it is up 9% in a week at 1,037, sitting still a little bit below platinum. Moving over to the dollar, if all the metals are up, the dollar has to be up too, right? No, not always how it works. Dollar's actually down 1.3%. We had a nice little rebound on the dollar last week, but we have pushed back below 100 on the US dollar, currently sitting at 99.65. And finally, since it's been on a bit of a run, the S&P, which has been up, so don't take this as the whole story, but the S&P is down about 0.5% from our recording last week at 5,842.
Yeah, it's down 1.6% just today. One more thing, though.
Yeah?
Bitcoin.
Oh, please.
That's over 108,000.
All-time high?
All-time high.
And what we're seeing here, this goes back to the restructuring, if you will, of the global monetary system. And as it feels its way around, as gold feels its way around, what it really reeks of is negative news. Miles, anything you want to go into from a Fibonacci or technical analysis standpoint, since you think that all that matters is the technical charts and not the news and fundamentals?
Yeah, well, I was listening to our friend Christopher Mullen over at the Technical Traders on a piece he put out yesterday, Tori. But he went off on about a 5-minute rant about how paying attention to news is irrelevant. So Chris continues to be my favorite technical trader out there. Gold price hit that beautiful 382. We talked about it here a week or so ago. We've had this really nice little short-term pullback in the gold price, which it has thus far bounced. But this is one of those things where it really is good to understand the difference between trading and trend. And while you're looking at these short-term moves in gold going up or down, or really any market going up and down over the period of time, it's good to know what road they're actually walking down. So on a long enough timeline, we obviously know gold is in a pretty strong bull market. Certainly the $1,500 move over the last year was nothing to shake a stick at. But also realistically, you have to have these periods of cooling off. And that's been our major bullet point of the presentation for the last couple of weeks. So gold short term, ever since hitting that high back at the end of April, those last couple of weeks in April, where we just scraped that almost $3,500 mark, over $3,500 on the futures market. Gold is sitting within a really nice, tight, compact, declining channel, working its way down and blowing off some of that steam. So despite the fact that we've had a really strong week in gold, we're still within the channel. And I'm a big fan of the idea that the trend continues until proven otherwise. So if we don't see any type of breakout movement in gold here, probably within the next week, I think it's likely we could see gold continue to slide down. And that fits in line with some of the other things that we've been arguing for, guys. I mean, what have we talked about through the years, say, coming up in the middle of the year every year? We've got our summer slump across the board in markets. So $1,500 rise in gold, maybe a $500 decline. Tori, what was your target we talked about last week?
Well, we didn't know if that 618 fib ultimately would hold in that short term, and that was lining up somewhere around 3,000. Obviously, we're not even flirting with that right now. I still am, I wouldn't say optimistic. I want a pullback. I definitely want the opportunity in a resumption of a bull market to be able to cost average in at lower prices.
Yeah, and some of the charts I've been looking at and some of the technicians thinking around 3,070.
I hope we see it.
Yeah.
News like we're seeing today,
Yeah.
much to the chagrin of Miles and Christopher Mullen. It is impacting some of these numbers. It is impacting the equities markets, and it will impact the dollar, which will impact gold. So there's a domino effect. And yet we are coming up on the seasonal low. I still am hopeful that we'll see a low put in June or July. All that being said, it's just a temporary reprieve, a couple steps back before we resume in the fall.
Which is healthy.
It's very healthy. I mean, Miles, you talked about this long-term bull market. It's long-term, and it's a healthy one, as you allude to, because it's had these opportunities to pause, form new bases, and gather information, if you will. And remember, gold isn't really so much of an excellent predictor as it is a reactor to all the things that are going on monetarily.
And it's not a U.S.
fiscally.
market anymore. Used to be gold was dominated by New York and London. It's not anymore.
It will be again, I think.
You think?
I think it will, but not solely,
Yeah.
right? Yeah, so
Sure.
Shanghai certainly has caused a lot of movement and actually been putting a floor in our markets from an Eastern influence standpoint. So
Yes.
yeah, that gold discussion is good, and whether or not we get this breakout, you know, as we get to the top end, Miles, towards your trend channel here on that decline, if we break out here in the short term, I mean, do you think we go back and test 3,500, or are you thinking that we just go back and test into around the 3,430 level?
Obviously, you got to do both because one's higher than the other. So that's the straw man answer I can give you. Honestly, though, when you've got a really defined channel, it's very likely that when you get a break above it, you're probably moving to the next, not just the next number, but the next significant number. The first declining ceiling that we had. So we had the high at 3,500, then we came down. Then we came back up and we hit 3,450, 3,440, and we came back down. Now we're on our way back up. Likely we stop around 3,350 and then turn back down. But if we break above that number, yeah, I think it'd be reasonable to see 3,500, us testing that again, somewhere within $50 of that. Now, it could test that and turn back down. That's your double top you hear people talk about that can happen in markets. Only one thing causes markets to go up, but two things can cause market to go down. So in order for markets to go up, you have to have more buyers than sellers. I mean, that's pretty obvious.
Or more money buying than selling. It could be fewer buyers, but with
Yeah, it
bigger
could be,
pockets.
you know, 1 billionaire versus 100 of us thousandaires.
That's right.
That's where the Hunt Brothers thing happened back in the 80s, right? It was just two dudes that broke the silver market. Now, on the flip side, there are actually two things that can cause the price of a market to go down. You can have the action of more selling than buying, and you can also have inaction, just inaction in general. Because if you think about it, let's say you sell apples for a living and you're trying to sell apples for $1 a piece and nobody's buying. What are you going to do?
Cut your price.
Probably going to cut your price a little bit, see if anybody buys there.
Well, and I look at the three factors. You have the technical factors, the seasonal factors, and the fundamentals, world events. And that's how I tend to split it all up. And right now we see the American buyer has not come back into the market yet. This is being driven by central banks and Eastern buyers. But we are moving seasonally out of our strong spring market into more of a summer slumber market that I see coming. So yeah, I think that we probably will see a further rally based on the news that we're going to be getting into here in a few minutes.
In the short term, like
Yeah.
a short-term rally?
Yeah.
I said that kind of in jest, but you're right. You point out a key piece, and that is right now we actually have fewer buyers, and the price has been climbing. but those are big buyers.
They are big.
Nobody's bigger than the institutional and central bank investor. That's the key point. But Miles, going back to the technical, before we leave gold, I want to just briefly talk about this $3,500 level. How much weight does that really carry with you? Because that wasn't an end of market day close. That was an overnight event that we weren't even awake for.
Well, I was. I saw it.
Yeah, the wise old sage doesn't sleep much anymore.
I don't think that's by choice, though. So I don't
No,
know
that's
if that
not.
counts.
Yeah, no, it's insomniac. But no, what do you think about that $3,500 level? Was it really tested?
No, that's a good question. The fact that the spot price sat just shy of it, intraday market trading. Now, just because it's our intraday doesn't mean it wasn't midday over in Hong Kong. So obviously somebody was trading at that time, just wasn't happening in New York. And that's fine. There's a whole lot more rest of the world than there is US. So that's perfectly fine that that happened at that point. I do think it holds water from that standpoint. The Asian markets care a lot more about gold than the US markets do. The fact that anytime a price stops at or around a pretty significant mental number, like 3,500. That's a pretty easy number to just pull a target out of the hat and say, let's just sell at this, or let's take profit here. Plus, you have to consider that the futures market always tends to lead out above the spot price. So even though we're not seeing a 3,500 move in the spot price, we did see a 3,500 move in the futures market.
Yes.
And we've been talking about this for months. Who's been playing this game this spring? It's been big time investors, big money investors, government, so on and so forth. I think they saw their 3,500 price. I think there was some take profit. Now, what I was hinting at a minute ago is what we haven't seen is a shift in sentiment. I've said this for years and years and years. Trends change quickly. They pause slowly. And what we're seeing here is a slow pause. So when you talk about inaction versus action, we are not seeing the action of buying give up and the action of selling start. What we've seen is the action of buying take a break, and now we're just seeing inaction, and gold is trickling its way down to find where we're going to pick up the action of buying again. So I think 3,500 matters, whether it's psychological, whether it's mathematical, it kind of doesn't matter.
Or whether it was a close or an intraday touch. It was just this brief little touch.
Yeah, because gold's a 24-hour market. So to me, there is no market close on gold.
Okay, so there's been short-term volatility in the bond market, but let's not leave silver behind because both of them were up 4% this week.
Right. And you've got a potential of a bounce in the dollar, but silver is looking very good right now. And copper is going to pull silver with it. There have been some big purchases in copper coming out of the Asian market. Dr. Copper is poised to move higher again. And we see this as a ratio opportunity for people if they're looking at their gold portfolio, taking some of that and reallocating that to silver right now, because we're still flirting with that 100-to-1 ratio, which itself is a unicorn, where 100 ounces of silver to an ounce of gold. That is a rare event. I've only seen it a handful of times, and I've never seen it like it is now, where you actually have time and the premiums on physical products are such that you can actually take advantage of it.
For weeks. Now, this has been just a really nice opportunity for our investors. And Miles, can you support what Rob just said from a technical standpoint, since all that matters are the charts?
Yeah.
Copper and silver, make the case for a breakout, if you don't mind. I'm not saying we're going to hold you to it. I'm just asking you to play bull here.
So gold, strong bull market followed by a correction. I mean, it's pretty cut and dry. Strong bull market followed by a pause, something that resembles a correction. 2 steps forward, maybe we get 1 step backwards. Silver, copper, totally different conversation. You're talking about 2 very clear, unending bull markets that are just really volatile baby steps. In my head, I'm dating myself here, but that old movie, What About Bob, with Richard Dreyfuss, like baby steps onto the bus, baby steps to my seat, baby steps off the bus. It's like silver and copper as well. You're talking about taking baby steps of progress, but just writhing during their weekly meetings with their therapist. Copper has these 30% swings up and down over the last couple of years.
Yeah.
But copper has just been nonstop climbing for years. Now, it's only taken baby steps. Copper's highs, if you just look at the line of copper's highs over the last 3, 4, 5 years, we're up, 9%? Who cares? But the swings have been significant.
Yeah, the volatility's been there.
Yeah, every high is a little bit higher and every low is a little bit higher. And silver's been doing the same thing since mid-2022. We're still talking about silver from July, August of 2022 down at 18 and change. Now it's at 33. And you look at these longer term charts on silver, it's just a rising channel and then a breakout up. Now we're in another rising channel, probably coming to the end of it with another breakout up. Now, that leads into the question you asked me. Can I add some credence to this for what Rob just said? 100 to 1 gold to silver ratio, you've got a declining gold price. And you've got a trend in silver that's continuing to push it up. And some of my clients I've been talking to about kind of readjusting our gold versus silver mix. The question I've been getting is, okay, are we gambling on gold coming back down? Or do we think silver's going to come up?
What's it matter?
It doesn't matter. Maybe
Well,
both.
when I look at these two charts, it's probably both.
Both.
Yeah. Okay. So then even silver's got a ceiling here of around 34.80, just under 35. That it's got to break through in order to really start to run.
Or 36.
So if it doesn't get north of that, then it will have to coincide. Let's say the ratio comes down to 75. It's going to coincide with the gold drop that we're calling for seasonally.
Yeah.
Because you make the point on higher highs and higher lows, Miles. Well, in the short term, we're seeing gold set lower highs and lower lows in this declining channel. So to me, I'm going to stick to my guns and say that's going to continue at least through July. And we'll have really good opportunities to buy dips here. And it could be the beginning of that tightening of that ratio at the same time if silver can hang in there. And I'm going to throw some fundamentals in there. If we start to get some signs of industrial revolution and manufacturing stimulus in the U.S., that the economic numbers start coming in a little bit better, inflation can pick up. That doesn't matter. Silver can do okay if it doesn't really start to run away.
Well, if you have a reindustrialization domestically coupled with domestic inflation, that is going back to when I was in the market back in the 70s. This is tailor-made for a nice bull market.
But man, I'm hearing so much bullishness with silver from just the layman, from people that don't really track it. They're hearing it. Right now, I don't know that that's sales pressure from stuff they're reading, or it's not coming from me. I'm more of a gold bug.
Buying. That's the problem. Is they're talking about it.
Well, they don't move the market. I think they're buying, but it's not a market move type buying.
Yeah, but silver doesn't play catch up until the general public does get involved. And that's the thing. Talking about it is the first step to making changes, right? But they got 12 more steps before they actually change their life? Isn't that how that works?
Yeah. Or gold starts getting dumped. Right?
True.
I mean, you'd have to have some very positive news for those that have been buying to start selling. It's the same big money. If the institutional investor and the central bank starts dumping gold, now watch what happens with that ratio. And that can happen in very short order because those can be large exit positions. And that's where I'm going to say, from a technical standpoint, it will be described away as a fundamental event. Central banks aren't buying and selling based on charts. No. They're buying and selling off of the fundamentals in the global economy.
Right. They're basically reallocating fiat into physical metal.
Or back the other direction.
They could.
For whatever reason. But it's not moving in the direction of the U.S. dollar. So let's transition here to the U.S. dollar because it got a black eye today, as did our Treasury market. So really key information here, Miles, if you don't mind catching us up on the dollar index.
The big thing, obviously, is the dollar index has been flirting around this 100 level on the DXY, the dollar index, and we did push back below it. The dollar's been on a pretty apparent decline. We had a gross overreaction to the interest rate rises, which is expected. People overreact to things, and now we're probably settling back into hopefully finds some water to tread in for a period. Personally, looking at where the interest rates are now, I'd like to see the dollar hover in this range indefinitely. That certainly would be my preference, but I'm a fan of having a consistent valued dollar. Shocking. Austrian economist enjoyer over here. So I'm a fan of having some consistency with our currency. But as we transition here over to some of the political things taking place that are affecting our markets, there's one pretty loud voice in the room that's not a big fan of a strong dollar. So we'll have to see how that ends up playing out. But yeah, I'm perfectly content with where the dollar price is. I don't see anything in the dollar right now that makes me think bullish or bearish. I think the dollar has found a fair price around 100, and I think it would take some type of something to get it to transition one direction or the other.
Well, we're on a tightrope, okay? I mean, with the Trump policies, reinvesting back domestically from foreign nations and foreign companies, the trillions of dollars that they are claiming is coming back our way. That's got to be good for the dollar. How is that not good? But on the other hand, you have trillions worth of treasury debt that has to be refinanced like what we saw today. So it is a tightrope.
Yeah, you want a weaker dollar in one hand, but yet you need to bolster global confidence in the dollar.
Right.
Right? They don't want a weaker dollar because a weaker U.S. dollar reduces global purchasing power.
Correct.
So they don't like it, but we like it.
We like it because we can export our goods.
Yep, that's right. It can increase inflation at home, unfortunately. But we're going to get into the details of strong dollar versus weak dollar in one of the upcoming shows here in the next few weeks. We'll do a deeper dive on that. And, really it's the bigger issue, bigger long-term issue is that we're working towards a declining value of the currency, and yet we're trying to increase the international demand for it. Right. So that's the issue. Is it's like, how can we do that? That's a political
perfect
game.
Yeah, it's the perfect end goal. Just how much garbage can I shovel at the highest price possible?
But how many people want to be buying the yen right now? I mean, maybe in a short-term deal, it's okay, but they're north of what percent of debt to GDP?
Oh, like 239 to 260, depending on who you're reading.
Yeah. Okay. 260%, I think, is way worse than Greece was, right? With their crisis. Well, the Congressional Budget Office came out and said that post passage of this big, beautiful bill, if it happens, and then they extrapolated out that our U.S. debt to GDP is set to exceed 220% by 2055. Well, who's going to want the dollar at that point?
Right.
Now you're shattering confidence in it.
And China is cutting their interest rates, trying to get the money out of the banks to stimulate their economy. Europe is a mess.
Moody's downgraded our...
They're cutting their deposit interest rates, right?
Their deposit interest rates. Yeah, they need to stimulate the economy, which is the point Rob's making, which they would love to do here. Trump wants our rates to be cut so that it's economically stimulating. People borrow more and they quit saving because they're not getting a return. So they invest it. So that's that weak dollar versus strong dollar policy. That's the tightrope.
Yeah, all the kids are doing it. If you look around the globe, okay, they're all in the
cool
same boat. All the cool kids, and this is why.
Big
so are some of the bullies.
We're all lining up.
And this is why I don't expect central bank buying of gold to subside. I expect it to continue.
Yeah, that's a good point. And same thing, with everybody with their debt to GDP.
Yeah.
They're printing their way out of this. They're trying to stimulate it.
And we've been talking about this for years.
Well, in our auction today, you guys, we've got to close here, but the auction today was a very weak 20-year bond auction, and it sent the Treasury yield soaring because it's a lack of confidence in our debt. So the S&P dropped 80 points in 30 minutes on that news, right? So S&P closed down 1.6 today. The Dow closed down like 1.9. And remember, we were just here in April. The 10-year yield is at 4.6%. Not good. The closer it gets to 5, the more catastrophic that is for our markets.
And the 30-year is already over 5.
It's already over 5. In fact, it's the highest since November of 23, you were saying?
Well, yeah, we hit a peak in 23, but you'd have to go back almost 20 years before we were over 5%.
Oh, yeah, back to almost the financial crisis.
2007.
Yeah. Yeah, so this is not shaping up because the bond market is the king of all markets.
It is.
And it sets the true interest rates. The Federal Reserve can do whatever they want with their Fed lending rate, but the underlying key is our U.S. bond market. And with that, Miles, anything else that you need to point out finally to close on a chart standpoint, or are we...
No, I think we're good. Just pay no attention to the gold the sovereign banks and nations are buying behind the curtain. Just keep buying their bonds.
And pay no attention to the Golden Dome.
It's shinier than an Iron Dome.
That's
so
right.
we'll see if it's as
It's
effective.
more Trump-esque. That's right.
Yeah. So let's see. I guess that does it this week for Golden Rule Radio. So thanks again, gentlemen, and thank all of you for stopping by for this week's show. We always appreciate it. If you liked what you heard, why not head on over to our website? You can catch our weekly podcast, our various articles out every week at McIlvaney.com to stay up to date with the news we're putting out. You can also find some additional info on Twitter at ICA Gold and Facebook at McIlvaney Financial. And as always, if you'd like to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, give us a call. We can be reached at 1-800-525-9556. Thanks again for listening and have a great week.